Hello and welcome to another update video about Natgas. It's going to be a quick one today, to be honest, because there isn't much that's happening here in the Natgas universe. Nevertheless, we are focusing on it, we're talking about it, and make sure that everybody's aware of the relevant levels. So first of all, what's the primary count? Well, at the moment I would still look at this as the wave 1 to the downside, the move that started here on the 3rd of March high to the downside as a wave 1 of wave 5. Okay, so that we have a 5-wave move in this 5th wave of the overall correction on the Natgas chart, then a wave 2 to the upside in a 3-wave move. This started on the 14th of April and peaked on the 19th of May. Since then, we've been coming down, and this is now really getting a little difficult, because if it now sells off immediately, breaks below the wave 1 low at $2.13, then I think we have some good evidence to say we're now heading down in a 3rd wave. Then we should get a 4th and a 5th, and this move down could be an ending diagonal. That's why I count the move down in the 3rd wave also as an AB, and now the C wave with 5 waves. Either way, there are different interpretations, and in both of the main ones at the moment, the focus would be on the downside. Actually, in all scenarios, I still would like to see another low, but there's obviously different possibilities. First one is this one here, yeah, that we're heading down directly in 5 waves. The next one is that we're moving in a triangle, because the idea is that this 4th wave, obviously, and I need to change the wave degree, let me just do that, that this 4th wave peaked here in March, but in an alternative interpretation, we could say the 4th wave is still running, but as an Elliott wave triangle. An Elliott wave triangle has 5 waves, and I consider it because the movements to the upside and the downside have both been corrective. If we were, the move down here, if that was impulsive, all good, but it's not impulsive, not clearly. Therefore, because we're making lower highs and higher lows, I'm considering that this could also be unfolding as an Elliott wave triangle, would be an explanation for why this is so boring. So Elliott wave triangle, A wave, B wave, C wave, D wave, and maybe one more high in an E wave, we could come down then. Yeah, so just be aware of that. Invalidation point for the triangle would be a break above $2.69. Above that level, we would need to look at the potential that either it's a triangle, but it breaks out the other way to the upside, or that this wave 4 is still in the making as an A, B, C structure. But this view of it being a C wave in the making here, which should in theory be impulsive, I don't really agree to, not with this, because overall, I mean, the move that started here in April to the upside, it's just a 3-wave move, so I'm not happy with it, yeah. So of course it can break to the upside. Free yourself from the idea that anything must happen in the markets. It can go up or it can go down. At the moment, we are in a range, so we really need to wait for the breakout. I think the focus is down. I think the pressure is down, but certainly downside pressure will reduce already if price breaks above that 269 level here, because it would invalidate the triangle, it would invalidate this 3rd wave to the downside. Surely it could just become an extension of this wave 2. That's possible, but yeah, we need to be flexible here. This is ranging. We don't have clear direction because the movements to the upside are corrective. The movements to the downside are corrective, so we just need patience, unfortunately. It is a frustrating market at the moment. It has been quite interesting end of last year, early this year, but honestly, since February, it's really, really boring. And literally, I mean, we haven't moved out of this range since end of February. This was interesting. The move down was getting boring already, and now it's just a sideways mess. So for me, it's to the upside. 269 could be considered at least a possible breakout out of this range to the upside, but better would be a break above $3, this spike. But then I would first consider it a higher wave 4. A break to the downside, confirmation that we're really heading down, would be below 195, and an overall bear market low sort of between $1, $1.50. I see that as likely. But first of all, I need to understand, is this really just a triangle? Are we in an ending diagonal? That's not crystal clear to me. And if we get some clarity by getting a breakout, then we can calculate the targets to the downside a little bit clearer and define them a little better. But unfortunately for now, there is not much more to update. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.